So here are some scenarios where an investor may want to use a DSCR slash rental loan. And so the first one, they may want to refinance the investment property to long-term debt after they completed the BRRRR method. So basically the BRRRR method is buy, rehab, rent, refinance, repeat. So the person will purchase a property, rehab it to create the equity, and then after that, they'll convert to a rental loan if they plan on keeping the property as a long-term rental. Another option is that they may want to refinance investment property that has equity. So they want to access that cash that's in their property. They'll do a cash refinance using the DSCR rental loan. Another one is may want to refinance the investment property to reduce the interest rate. And that way they can improve the cash flow. And the last one I have here is that they may want to purchase an investment property that's in move-in ready condition. That way, the property can be vacant or occupied, but the property numbers will dictate the loan product. So once again, you don't need your personal income. You can utilize the property's numbers to purchase a property. And I'll jump into more in the next couple of slides as far as the flow process. So here's a flow chart. I'm a visual learner, so I created a flow chart of the process. And there's a lot of stuff on this chart, so I cut it in half so we can see a little bit better. So process-wise, which is slightly different from your traditional residential purchase, is that you're going to contact us first, discuss your real estate investing goals. You get in touch with a realtor, you're going to view the property, and then you can finalize your numbers as far as your purchase price, the rental amount, property taxes, hazard insurance, and also to association dues if they have it. So because it's a rental loan, you might know most of the stuff prior to seeing the property, but sometimes you still may not have it all figured out as far as your purchase price. Because once you have your purchase price and you send those information to us, at that point, we'll give you property specific loan terms for this particular property at say 123 Main Street. So we must have all those numbers and we'll create you loan terms for that particular property. And then from there, the process is the same as far as writing your offer, clearing conditions. When you purchase these properties, we prefer that they're in entities, like say it's like an LLC. And then everything else besides that, the appraisal, title insurance will be pretty much the same. You're closing your property, you rent the investment property, and then you continue your wealth building journey towards financial freedom. So that's like the high level of the process from beginning to end to buy a rental, using a rental loan to buy a property. And once again, here's some of the questions we're going to ask you for a debt service coverage ratio DSCR loan. We're going to ask you the property address, the property type, estimated property value or the purchase price, estimated current rents, property taxes, hazard insurance, and then also your credit score. So your credit score does matter. So please ensure that you take care of your credit score. Here's some general information regarding DSCR loan. Prefer the credit score to be above a 660. Prefer that you're at least a second time property purchaser, meaning that at some point in your life prior, you've owned a property. And the property purchase, the loan term is probably about 80% of the purchase price as far as covered for the loan. Loan amount, prefer to be $100,000 minimum. We do have a few options that go below $100,000, but for the most part, we've seen a lot of our lending partners have increased the minimum loan amounts. The loan terms, similar to like a conventional loan, we can do a 30-year fixed, can do an ARM option, like a 7-1 ARM, and an ARM means adjustable rate mortgage, which means the rate will be fixed for say 7 years, and then after that, it'll adjust after that 7-1 ARM period. We also have interest-only options available. For example, if you want to do a 30-year interest only, and that would allow you to probably increase your cash flow in the property, we'd have those options available as well. Time to close, estimate about 30 days, and then appraisal fees are going to vary. And if you happen to purchase the property cash and do rehab with your own funds, we can cash you out as soon as you're done with your project. So that's also a great option as well. There's no season requirement if you pay cash, and also if you do the rehab with cash as well. So here we created a quick example of the DSCR rental loan scenario. So for this example, the purchase price is $250,000. We're going to make the assumption that you can do 20% of down payment, which then gives a loan amount of $200,000. The annual net operating income is $24,000. Annual debt service is $20,000. And then to get the DSCR, We're going to divide the annual net operating income divided by the annual debt service, which gives us a DSCR of a 1.2. And the good thing about the DSCR loan is that you don't have to do the DSCR calculation. You're going to provide us the numbers for the rent, tax, insurance, and your purchase price, things of nature. And we'll do the calculation for you. So you don't have to worry about the calculation, but people ask the question. So we're going to show you this example. And also, we could also tell you the DSCR that you get for your property. And typically, you might want to have a DSCR around 1.2, 1.25 as a decent number. You can still have it around 1 to get the loan, but that just means that you're not making that much more money on top of the debt service. It's a 1-to-1 ratio. But there are loan options available at the lower DSCRs, though. So here's a sample of the loan details. Once again, we'll do the purchase price of $250,000, 20% down, gives us a loan amount of $200,000. And then on your loan terms, you're going to have your monthly payment, which typically is your principal, interest, tax, and insurance. And you have your association, but the insurance, I want to point it out that the price of insurance have evolved over the past 5 to 7 years. So keep that in mind as you are looking at properties, to not take lightly the insurance costs in your monthly payment. If you need insurance partners, let me know. We know several people across the U.S. in the insurance field. If you need an insurance person to talk to. As far as the estimated interest rates, that number you see there is correct. As of today, I've been talking to a lot of my lending partners. Some, the rate can be as low as 5.75 and higher above that. To get a rate that low, of course, you need to have great credit. It's a single family home, and also your loan to value isn't 80% of the purchase price. It might be more like 50% of the purchase price to get a rate that low. But generally speaking, rates have come down, and we can get rates, great credit, a good number is probably like in the 6s, if not in that upper 5 range. The loan terms can be 30-year fixed. Also, for this scenario, I did a no prepayment penalty. There might be some scenarios where there is a prepayment penalty, and it might be like a 5-year prepayment penalty. And what that means is that it's to be a step down, 5, 4, 3, 2, 1%. If you sell in first year, you're going to pay 5% of the loan amount if you sell in year 1 for a 5-year prepayment penalty, and it'll step down 4%, 3%, 2%, 1% as you go on. And also, I want to highlight again, the loan is based on the property's income, not your personal income. You can do this multiple times independent of your personal income. Well, here's some fun facts. You don't have to have a job. You don't have to have 2 years employment history. You can be tired of your boss and quit today, and you can still buy investment properties. Don't worry about the DTI being maxed out when you purchase your primary residence, because it's not the same equation. And you could be self-employed, a business owner, and like I said, it's easier to buy real estate investment properties. Final message, and get comfortable being uncomfortable. What is your why? Have as many as you want. The more is better, and it's actually an easier process. The more whys you have to put down, and don't be afraid to bet on yourself. I'm going to repeat that one. Don't be afraid to bet on yourself. You don't want to live your life and say, "I wish 10 years ago I took this step when I had the opportunity." So bet on yourself if you need to. And once again, our motto is fear plus action equals growth. You can reach us at BRRRRcash.com. Follow us on LinkedIn, Facebook, Instagram, TikTok, all the platforms. Also join our mailing list. You go to our website, BRRRRcash.com. That way you can be informed of any of our future Learn with BRRRR Cash events.